Hello and welcome to another episode of Fintech Focus TV with me, Toby. This time we are delighted to welcome Chris Murphy from Ediphy. Chris, how are you?
I'm very well, Toby. How are you?
Really good, thank you. Really good. Listen, it's been great to understand and get to know the business a little bit more. We've been seeing more and more of you guys in the press of late, and some exciting stuff over the last year. And there's so much of that story to tell. But before we get into that and go too deep into it all, and I spoil the fun for everyone, can you give us a little bit of background to yourself and how Ediphy came to be?
Of course. Well, I guess you can tell by the lack of hair that I've been around the block for a while. So my background is 25 years now in capital markets. So I worked for Morgan Stanley for 15 years, ended up running the European rates trading business there. And then latterly, 7 years at UBS, where I ended up running the global fixed income business. And, what we're trying to do with Ediphy is really sort of reimagine what a capital markets business should be. So I guess, throughout my latter time within the large banks, it became obvious to me that post the financial crisis where, all of the problems with high leverage were sort of made transparent. Obviously, the regulators came in and started to reprice the cost of leverage. It all came down to how do you create operational leverage within these businesses rather than rely on financial leverage. And what does that mean? It means that you've got to be very, very focused on the front to back. You've got to be very, very focused on how these businesses are operating front to back. And the problem we've had within the capital markets industry is that we had, a 20-year bull cycle where we grew businesses very, very rapidly. It was very, very focused on top line, and no one really cared about the cost line. That's where the sort of technology became sort of bloated. We had, I think at UBS when I left, we had over 2,000 different applications in the investment bank alone. And with that sort of level of fragmentation, the complexity goes through the roof, and that's at essence the problem we're trying to solve at Ediphy.
I think that's fascinating, and also I don't think there's any coincidence that you see quite a few people come out of UBS and with similar sort of frustrations and have started up very successful businesses in doing just as you said. It's been a sort of procession of businesses that I know and have spoken about in both actually buy and sell side arenas where it's been a good breeding ground for innovation based from, as is quite often the case, the frustration of things can be done a little bit better around here. So talk us through the journey. It started up when?
Yeah, so we started sort of noodling around with some ideas early 2017 rather. So myself and my co-founder, who is my CTO, Dan Wild, and really started building some technology back then. So the idea is that, we've created a new capital markets business with one tech stack. So rather than those 2,000 different applications you need, we have now one, which basically really focuses on maintaining sort of data lineage right throughout the trade life cycle. We have, finance, risk, settlements, and all of the sort of front office connectivity to market gateways, etc. All of that in one code base, all updating in real time. And so that's been quite a big heavy lift, right? We built a lot of the technology over the first 2.5, 3 years. Over the last 12, 18 months, we've been operationalizing it and coming to market. So it's been quite a long journey to get to this point, but so far so good.
And what an interesting time to be coming to market. I mean, let's rewind. We're filming this at the start of June in 2021. Coming to market from the timings that you've just spoken about would have been the start of 2020. There's some marbles to throw under an idea, isn't it? How have you dealt with all of that?
Well, yeah, I mean, you kind of you go into this sort of entrepreneurial journey thinking, well, you've got a long-term vision, a good game plan, but it's about surviving, right? It's about sort of getting through the ups and downs that hit you, and a global pandemic was not something that
not in the business plan,
right? It certainly wasn't in the business plan. And so, we were at the stage at the beginning of the pandemic where we were just about to bring the trading product to market. And we just said, you know what, it makes no sense trying to push this into a market that is disjointed. So we decided to scale back the sales effort at that stage and really double down on the product. So we've expanded the product line in the last 12, 18 months, and now coming back to market on the capital markets business with a much broader and better offering. So it's about surviving, getting through, and coming out the other side stronger.
And coming out the other side stronger is certainly where you guys would have sat, right? Because it's that sort of phase as you talk about, to then go out and have all the challenges that were put around you, and then to say, right, okay, let's have a crack at our Series A as well.
I guess we started the fundraising process around July of last year, and I was kind of pretty skeptical as to whether you could really raise some money on on Zoom, but it worked out incredibly well. In fact, I think it was 10 times more efficient than it would have been if we would have been still in face-to-face meetings. But I was just amazed at how inclined investors were to continue to engage and to trust in the process and listen to the story and ultimately write checks, right?
I think that's the key thing, isn't it? It's listen to the story, and no matter what the scenario was, I think there was a general consensus, despite the sort of early letters that were pushed out to various stakeholders of some of the big players, that there was always going to be opportunity in this, and investors were always looking for wins that could be got and opportunities and deals that could be got at a good time, because this has been a time of, in particular in capital markets, of rapid acceleration, change, and opportunity and innovation. And that's been really interesting to watch. If you could look at those though and say, right, okay, despite the fact you said it was an easy process, I think there's probably a clue to the fact of everything you've just been talking about, saying that easy processes are usually led to happen by strong processes that come before that, strong stories and a strong founding team and a strong go-to-market and a strong proposition. No matter how easy or otherwise it would have been to have done things over Zoom, if you've got a bad product, a bad pitch, a bad idea, people aren't putting money behind it in whichever way that you get in front of them. The cult personality is very rarely going to be the bit that wins the race for you. So I think this actually put even more of a spotlight in from what I've understood, pitches having to be absolutely on point, as clear as they could possibly be, with real validity to what they want to do. Why do you think that was such an easy process for you? Because it was because if you hadn't had a really strong product and solving a genuine problem, I think you'd have struggled to have got that anyway, which might seem obvious to say.
Yeah, I think that's right. So I think firstly, when we told the story about the problem we're trying to solve, this whole problem of fragmentation of technology stack, the fact that most of these businesses in capital markets are built off 25-year-old technology that has not been built by design, but has kind of evolved into a state which is, has many cracks starting to emerge. I think that story resonated with a number of our investors that had some sort of an experience of that. Being in large organizations, many of whom have worked in investment banks before, and recognized these operating models are super rigid. They're getting ever more rigid because people don't understand. People running these organizations don't really understand the front to back anymore, so they're becoming ever more cautious about making any changes. That slows down the pace of innovation. It makes the risk of any change go up dramatically. And they recognize that, look, at some stage, there needs to be innovative new players coming in that are disrupting the sort of institutional space, just as, we've seen the likes of the Monzos and the Starlings and the Revoluts doing so in the retail space, right? So that sort of very much resonated. And then also, I guess the pandemic crisis started to turn investors' attention around to digitally native businesses, right? So businesses that could really leverage the power of technology to completely change, business models. And again, we had, a large element of that.
I think there's a really interesting theme sort of growing through what you're talking about there, because this series of the podcast and the show are going to be very much focused around some of the reasons and the sort of fundamental building blocks between fast growth and sustainable growth. And I think there's probably as we were talking about pre the show, fast and sustainable growth are not exclusive things that we're talking about there. There's quite often a case where the two don't sit well together. I think what's very interesting about you and your business is it's hinged on 3 or 4 different things that allows that sustainable growth to happen, and it can happen quickly at the same sort of time. A lot of which we've just been speaking about with regards to an investable business solving, one of the predominant issues there of a genuine issue for a customer. That's almost given for any successful business. You've got to be looking at a problem which is there to be solved. So, which again sounds a lot more obvious than is the case at various different stages with some of the businesses that I look at. Solving a problem, either reducing cost or reducing friction and making things easier. But also, and I think this has probably been undersaid so far on some of the things that shows that we've run so far, having genuinely cool, innovative, and you mentioned they're digitally native businesses, technology at its core that's going to make a difference. I know one of the things that you guys are most proud of is the whole tech stack that you've put in place there, and how your tech works to solve these issues. Give us a little bit of an insight into that, if you would.
Absolutely. So, as I said before, Toby, so we spent the first 2.5-3 years actually building the platform, right? And the reason we took so long, there are many other companies out there that will rush to market with an MVP and start to, try to test that MVP in market, because we had, a good degree of certainty in our market around, what solution we wanted to build, and we knew that there was going to be demand for that type of solution. We thought it was, again, you also talked a little bit about sustainability. What we're trying to build within Ediphy is a sustainable business that is built off this core technology platform. And the reason we spent so long is just to make sure that that platform was truly scalable, and we can then leverage the benefits of it, right? So we can start to be much more agile given that technology base. We know that it can do all of the things front to back, and it's not just built for a certain niche. And so, the problem we essentially are trying to solve is making sure that we can help our clients avoid the integration problem. We think within this industry, the curse is that you're trying to bolt together different pieces of technology, and that creates a very, very fragile ecosystem. Our solution is sort of turns that on its head and says, okay, we can try and deliver whole scale solutions to clients front to back, and where we sort of internalize that integration problem. Because our platform is truly integrated, you don't suffer the headache of having to maintain a variety of patchwork quilt type systems. They're fragile in their integrations. We internalize all of that for you.
So that sort of Frankenstein tech stack issue that we've seen many people sort of suffer with doesn't come into it. I'm quite interested actually to sort of explore that a little bit more, because one of the big things that we've been talking about on the show, and we've had various debates, is the sort of rise of collaboration. The opening up of APIs and people being able to sort of tailor and bespoke solutions from multiple vendors to provide solutions to their specific issues is an advantage. But we're also talking there about how it creates problems at the same sort of stage, and this is where you enter stage left, right? I presume that's
Yeah, and so look, we are, obviously aware that there is a different approach here, which is around buying best of breed solutions, looking at open APIs, and trying to knit that sort of stuff together. And superficially, there is great appeal to that, and there are some great companies solving some very, very specific issues there. However, that does come at a cost, right? So yes, you can kind of, you can pick the best of breed and try to integrate them together. And there are some tools out there that, again, will help you to do that. But we think that over the long term, the total cost of ownership there is actually quite high, because, as you start to go through the upgrade cycles, okay, if I upgrade, take the new version of XYZ solution, what does that break, down the line in terms of the other systems that I'm using? It's that overall overhead that I think people underweight when they're making some of these buying decisions. And our approach is very, very different. It's a you can take more and more of our service, but you know that the next service that we offer is going to be truly integrated into the one you're currently using, right?
Yeah. I think it's a really interesting sort of conundrum that we're facing as an industry at the moment, where there are so many opportunities, and having that sort of clarity to simplify and make things work in a far more productive manner is there is an open wide market, and I guess I completely understand why the investment sort of came in for that, because it just makes sense, right?
Yeah.
Another one of the sort of I guess cornerstones of growth has to be around putting those pillars in place. And pillars in place can be about mission, it can be about culture, it can be about team. Team culture, I know, is something that particularly in capital markets people have struggled with for some time, but I know it's been sort of very much at the kernel of your thinking and how you've been set up from day one. Illuminate us a little bit about your thoughts around culture and its importance in all this.
Yeah, again, that's another key pillar of sustainability whenever you're sort of building a business. And I think, the benefit you have when you're starting your own business is that you can instantiate that culture right at the outset. I think cultural change is a lot harder than, setting out the right culture on day one. So, you mentioned, the financial markets. The industry has gone through a number of conduct scandals, whether it's the LIBOR scandal, we had FX, blah, 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 blah.
Yeah.
At UBS, we went through a period where we tried to enhance and change the culture, but those cultural changes take a long time. It needs continual reinforcing, because people build up certain habits that some of their behaviors become unconscious, and they don't really think an awful lot about what they're doing. Whereas what we set off to do with Ediphy is put a certain ethos at the cornerstone of what we're doing, right? So, the key themes are around, never forgetting that the end customer is the man and woman on the street that, has a pension, right? That is saving for their retirement. So, anything where we can help, save some cost in that whole value chain, that's important to us, because when we go out onto the street, we feel as though actually we are delivering some benefit to a society as a whole. Really thinking about, okay, well, how do we be very transparent about what we're doing with our clients? Again, this industry has been sort of beset by hidden fees and conflicts of interest and what have you. The technology is one thing, but it's how do we deploy it within a service? And the service, we feel, needs to be very, very transparent. We need to think about getting fair outcomes for our clients, rather than thinking about how much money we can make from our clients. That to us is just as important as having best flashbang whiz technology.
I think even before we were on this show, you were talking about the importance of win-win to you as an individual. How much is your sort of value set entwined in the DNA of the company then?
Yeah, I mean, look, personally, I like it when I can develop productive relationships with people, right? If relationships are one-sided, they never last. Yeah. And so, with us, what we're trying to say to our clients is, look, we're going to charge you a fair price for the service we provide, but it's got to work for you, right? If we're not providing a good service, if we're not justifying the fees we're charging you, you shouldn't be using us.
Yeah, absolutely. And I think it's interesting for me about this everything that you've just been speaking about is about growth. It is about giving a platform for a sustainable growth of a business, and a business that isn't just there to, as you say, as some businesses, even those who we've talked about before, come out of UBS and go on an immediate high growth phase and then sort of fizzle out a little bit. This to me feels like something which is cemented in the practicality of a long and sustained growth period. Putting into that what you've done and how you've been thinking about that from that sort of perspective, there's also a number of different things and announcements that you've been making recently about things which do make it quite exciting and do afford and probably facilitate fairly significantly quick growth at the same sort of stage. I've been reading recently about your consolidated tape initiative, for example. Give us some more colour on that.
Yeah, so I guess this whole consolidated tape debate, for those that are not sort of steeped in the bowels of MiFID II, I guess to explain it very, very simply is that both in equities, but particularly in fixed income, that there hasn't been sufficient transparency in the market. So the way the fixed income market works is that if you were to buy a bond, it would be a principal bilateral trade between you and the seller of the bond, and no one else would know about that trade. After MiFID II, the requirement was that every single trade now needs to be made public in Europe. So what that does is it means that everyone else within the marketplace has much more confidence that they know where the price should be because they're seeing all of the trading activity in the marketplace. And the thesis behind it is that that should then encourage deeper liquidity within the markets because everyone has a much better idea as to where things are trading. The problem with the MiFID II regime thus far has been that whilst there has been, or whilst there was always this concept of a consolidated tape provider within the regulation, no one has come forward to fill that role. And there's a number of reasons why that's been the case to date. But what our announcement has done is basically to try to catalyze some of that development. So we have, throughout the last 2.5 years, been collecting a lot of the transparency data that is being published and producing our own consolidated tape for our own internal consumption. And what this initiative is doing is now saying, okay, to the broader market, join us in helping to develop that further, clean up some of the data quality issues that we're seeing with some of the data that is being published, and then try to really create this sort of tape of record that the market is crying out for, to help improve fairness, transparency, democratize the data in the marketplace. So we're very excited about it. We're out there encouraging all market participants to engage. We'd love to make this as broader initiative as possible. Our goal here is to provide a utility to the marketplace so that people can consume this data at the lowest possible price.
It's an incredible thing to look at, isn't it? Because it's you can sense the excitement about what you're talking about within it, and the opportunity for people to come into it. I know you're at final development of the advanced prototype at the moment as we speak. What with people wanting to get involved in it, who should be getting involved, and what's the best way of them doing that?
Look, it's buy side, it's sell side, it's even some of the venues themselves, right? Having the ability to get full transparency in this market will benefit all players. So we're not saying that there are some debates within the industry around what data should be made public. We're not getting involved in that debate. That's for the EU Commission and the UK authorities to really decide what they want to be included in the tape. What we're offering to provide is basically the technical capability to actually consolidate the data that is being published, and then to provide it to all capital markets players in a digestible format, so that they can actually create some value from the data.
Amazing. And in terms of Ediphy itself, talk to us about the future. What does the next year, 3 years, 5 years look like for you? What's exciting?
Yeah, look, we want to make the most of the core of the technology that we've built, right? So the advantage we have is that because we know that we can operate these businesses front to back with one tech stack, we're just going to keep on adding products. So we're going live with government bond trading and cleared RS trading over the next month or so. We'll be adding credit trading by the end of the year. And then we just want to keep on going, keep on adding more products so that we have an execution service that the buy side can use that basically spans the whole of the marketplace. So we're very excited about the execution services business. but we'll start to also develop further technology offerings that go deeper into the stack. So whether it's risk analytics, whether it's settlement services, compliance reporting, we've got a lot in the pipeline. And as I say, the core of the idea is that it's all going to be integrated, natively integrated, and so you don't have to do the work as a customer to integrate one thing to the next. We just do it for you.
And it's predominantly UK orientated at the moment, isn't it? Have you got designs on the world?
Yeah, so look, we're very much focused on UK, Europe right now, but the business plan has us looking at something in the US towards the end of next year, and then we'll look at Asia after that. So what we're doing is highly scalable. We're solving problems that are the same in the European markets, in the US markets, in Asia. The problems are the same. It's about how we tackle digestible growth, right? We can't do everything all at once. So it's about having the right roadmap for the product and the right roadmap for the sales geography as well. But big plans and very exciting times.
You certainly sound it, Chris. Look, it's been fascinating speaking to you. I love seeing businesses at this sort of phase of their growth, and particularly ones that are so robustly formed, to allow for that sort of that sort of platform for further development as well. I've got no doubt that we're going to be seeing and hearing an awful lot more of you on the show and in the marketplace as we continue to take that further forward. It's been an absolute pleasure having you on. Thanks so much for joining us. How should people get in touch with you if they've been interested in hearing?
Yeah, they can look at us on Ediphy.io or reach out to us on email, info@ediphy.io.
Brilliant stuff. Listen, thanks so much for coming on the show. Really good to meet you. Good to talk to you.
All right. All the best. Thanks, Toby.
No problem at all. And thank you all for watching. We will be back very soon on another episode of Fintech Focus TV. Thanks a lot.